WeWork's biggest investor wants a call off the IPO. Leslie Picker has more on this story. If you're getting 47 and you're now getting 20, I might say let's wait a while and see.
I
if
would
we
say
can
cut your losses, but losses seem to be kind of the key problem here.
Yeah.
That investor, Softbank, though, is urging WeWork's parent company to abandon the deal. According to people with knowledge of the discussion, Softbank is concerned about the valuation that WeWork could get in the public markets. WeWork is having trouble finding investor demand at 1/3 of the $47 billion price tag that Softbank assigned in its latest funding round. That big markdown could spell big trouble for Softbank's attempt at raising another $100 billion vision fund to invest in startups. But WeWork does not appear to be giving up easy. A separate source I spoke with said it's still all systems go for an IPO. In other words, WeWork is still moving forward with the deal, although I'm told plans have yet to be finalized for a roadshow and a listing day. WeWork needs the cash. The company is burning through more than $150 million a month, and its expansion plans are even more costly. An IPO could bring billions of dollars more to the table. Plus, WeWork would get to cement a $6 billion credit facility from the banks underwriting the deal. There is one potential solution for the two sides. Softbank could come in with more capital, bail out WeWork, and shelve the IPO. But the discussion now is whether Softbank really wants to double down here and whether its LPs would actually let it.
The discussion whether they really want to, but it sounds like probably not.
Probably not. I mean,
because they're kind of pushing them to go find money elsewhere.
Right. I mean, they've already put in $10.5 billion into this company. This IPO plus the credit facility is about $9 billion if you round up a bit. So that would be them really doubling down, and that is a lot of money to put into one company.
And if SoftBank's concern, at least in part, is the fact that going at a lower valuation requires them to essentially take an on-paper loss from where they've invested, if they were to invest more in WeWork, at what valuation would it be?
That's the key question, because right now they're invested at kind of this blended valuation in the 20s and $47 billion. So, you know, theoretically, and we've seen this in the Valley all the time, and that's part of the reason why we're seeing so many markdowns that we're seeing these days in terms of IPOs. But you do see venture investors come in round after round and mark up their valuations.
Although we should probably point out that when these venture investors are getting in and giving it a $47 billion valuation, it's not apples to apples most of the time. You can't say this is the same as what's going to be offered to the public once they go out for IPO, because a lot of these have warrants on them. A lot of them
liquidation
they're preferred, so they would come first in any situation. So
exactly.
It's not an apples to apples. And maybe a part of that is just the reckoning that, hey, these valuations were never what they said they were going to be.
In the simplest of terms, it's a marketing number.
Yeah.
Because, like you mentioned, they have all of these various stipulations within them. I'm not quite sure what the exact terms are for SoftBank, but oftentimes you see liquidation preferences whereby if a company is sold or if it IPOs at a lower valuation than you put money in, you get a greater proportion of that stock. You dilute future shareholders in order to kind of keep you whole. So it almost doesn't matter for a company if they have those liquidation preferences and they put a really high number on there, so long as they do.
It's a marketing number. You're right.
Exactly.
Yeah.